What is going on, traders? Special edition of TA Tuesday, because this is the Tuesday right before FOMC, the Fed meeting. Yes, we will get to see what Jerome Powell and his homeboys slash homegirls are going to be doing with regards to rate hikes and what they're going to say as far as rolling assets off the balance sheet and how hawkish they are going to sound for the future, for the near future, right? We're going to hopefully get a sign for whether they're thinking about pausing. Although, based on how hawkish they've been sounding recently, they probably won't say that. But more importantly, in this special edition of TA Tuesday, by the way, if you're not subscribed, what the hell are you doing? Subscribe, especially if you're watching this and you continuously watch this channel and you're not subscribed. I will be compiling all of the TA Tuesday, TA Thursdays into a special playlist. That way, it's a lot easier for you to find in the future. But in this TA Tuesday, we're going to be going over not obviously not only a TA of the markets, but I'm going to look specifically intraday at each FOMC meeting and tell you from a technical perspective how the market performs before the meeting and after the meeting starts. And there is an extremely surprising and consistent take here, something that happens each and every single time, or has happened with each Fed rate hike here in 2022. We've had 4 so far. Tomorrow, as of the time of this recording, September 21st, is going to be the 5th. And then we have another meeting in November. We'll talk about what I think they're going to do. But this is going to be focused, as you know, primarily on TA. The market is down today before the FOMC meeting. This is very typical. A lot of stocks making 52-week lows, including stocks like Microsoft, including stocks like Google making fresh 52-week lows. And then obviously the markets themselves are also down as well. The NASDAQ is down almost 1%, and the S&P 500 is down, although they were down a little bit more, but surprisingly, S&P 500 down even more than the NASDAQ. Usually the NASDAQ makes bigger moves, but down 1.3%. Luckily, we closed our calls yesterday. We opened up calls on the triple Qs, closed those for 42% profit. Now, I will get into this more when we start talking about TA, but I'm not going to be opening any options positions here today, September 20th for September 21st. The reason is because those options will be subject to theta decay, which is the most violent the closer that we get to expiration. And they will also be subject to what we call implied volatility crush. When you buy options right before a binary event for that binary event, and then the binary event occurs and all of the information is released and everything is now priced in, you suffer what's called IV crush. And IV crush simply happens because there is a huge decrease in demand for those options, which makes sense. This is why this happens after earnings calls as well. IV crush is not some magical term. It sounds fancy, but all it means is that there's a decreased demand, a sharp drop in demand for that options contract, which thereby then decreases the implied volatility that traders are expecting because now the information is out, right? So there isn't that volatility from the unknown. Anyway, just a little bit of lesson there in the Greeks for all of you that are interested in options trading. And before we get into the TA, if you guys want access to all of our trades, including the real-time trades that we made yesterday, the ones that we will be making likely on FOMC day, as well as what stocks we're buying, what cash secured puts we are selling, because now stocks are back in cheap territory. Sign up, link is in the description below. We only have a few spots left for September before they are closed off, and we won't open them back up until October. We try to keep the group tight-knit and small-ish, even though there are thousands of traders in there, but try to keep it tight-knit and intimate so that everybody gets value out of the group. Sign up, use the link in the description. Let's get right into it. So let me get into a more macro view of what's going on in the markets, and then I'll describe the intraday dynamics of what goes on during the FOMC meeting. So right now, after enjoying that small technical bounce that we saw in the beginning of September off of the golden pocket, and the market climbed something like 7%, we now see about a 7 or 8% decrease in the markets thereafter. We obviously have these June lows looming here, these June 17th lows. And as I said before, I think that it really depends on Fed policy. What the Fed is going to do will dictate whether we revisit these June lows in the short term or not. Now, keep in mind that I do think a recession is still on the horizon, and we've never seen a full recovery in the stock market while the Fed is raising rates. So while the Fed continues its rate hike cycle, it's impossible in my view that we see an actual low, like an everlasting low on the market for this bear market. Right now, if the Fed pivots at some point, well, then we could talk about lows. But during a Fed rate hike cycle, during a balance sheet runoff cycle, or what we call tapering, during a taper tantrum, we are likely not going to see an everlasting low in the market. But in the short term, what happens between now and say the next earnings cycle in November and the next Fed meeting in November, it's November 2nd, we could see a temporary low. And this could be the temporary low. And the FOMC meeting could really dictate, somewhere around the FOMC meeting could really dictate whether that is a temporary bottom or not. Now, if the Fed comes out and does a full point rate hike or 100 basis point rate hike or more, which I don't think they will, but if they do that, then I do think that the market will, in the short term, revisit these lows. However, the scenario that I think could happen here is that, what's priced in is a 75 basis point rate hike. We see a temporary bottom. The October CPI comes in at expectations or slightly better than expectations because prices have been dropping. Not saying that's going to last, just talking about the short term in October. And we do see a rally at least into November, where we have three major things going on in November. We have obviously the elections, we have the FOMC meeting November 2nd, and we also have the next major earnings season where the mega cap stocks are going to be reporting earnings. Now, here's where we could potentially see the beginning of what we call earnings compression. If earnings guidance and earnings are now majorly affected by the economic downturn or the economic slowdown, then I do think that that is around the time that you will then see another drop in the markets, potentially visiting these June lows here and potentially breaking them, really depending on how broad-based the economic turmoil is and how broad-based the earnings decreases and earnings revisions are. Now, I think you have to start thinking about adding stocks to a long-term portfolio here. Again, I said that a lot of stocks right now are making new 52-week lows. Microsoft here at a low since May 2021. That's definitely one that I want to pick up, especially because we're down, 35% on Microsoft. Google, same thing, February, May 2021. We're now revisiting these lows. I mean, people would have killed for these prices back in January of this year. These are the price points that people said, oh, I wish I can get these stocks lower. I will load the boat. But now, obviously, noob investor psychology kicks in, and definitely nobody is loading the boat. I guarantee you that. And they won't load the boat until these stocks make new highs again. That's just what happens. I've been in the market for 2 decades, and I guarantee you most people will fall into that category, and only the smart money will start picking up stocks here. So again, if you're part of the Academy, tune in to the announcements. We will be sending announcements on things we're buying, as well as cash secure puts we are selling, and other potential options and futures trades based on what's going on in the market. All right, let's talk about the FOMC technical analysis specifically and what is going to happen, or what usually happens during these Fed rate hike days, okay? So let's go all the way back to March. This was the first rate hike of 2022. Half an hour after the FOMC meeting. And the reason that I highlighted this, one, I was looking at the hourly chart, but two, it's because you see a lot of volatility happen right before Jerome Powell speaks, right? And the smart money then gobbles up those stocks and knows, or gobbles up the market and knows that, the minute that this information becomes priced in, well, what is going to make the market drop further? Unless there's something really surprising within the meeting itself. But even then, like you saw back here in May, I think May is when they did the 50 basis point rate hike, right? So they started with the 25 basis point in March. In May, they did the 50. And the 50 shocked the markets because I think at that point that was unexpected. And that was the first time the Fed pulled their guns out and said, all right, it's time to get aggressive, right? So once they did the 50, even that day, the market did rally, right? But then the market started tanking from May until we found those June lows. And then June, we did a 75 basis point rate hike. Market started rallying. July, we did a 75 basis point rate hike. Market started rallying. And then likely tomorrow, we will be doing a 75 basis point rate hike. Again, if we do a full point, I think all of this goes out the window because that is unexpected. Okay, so what happens is that half an hour after the Fed starts talking, so 2:30 p.m. Eastern time, this is when we tend to see a bottom for the day. Now in March, we rallied 3.75% from 2:30 p.m. Eastern time until market close. In May, we rallied 3.67% from 2:30 p.m. Eastern time until market close. In June, 3.07%, same thing, 2:30 p.m. Eastern time. And in July, 1.82% from the 2:30 p.m. until market close. So in this case, this is why I was saying that I will not buy calls on Tuesday, the day before the FOMC meeting, because those calls are going to get crushed by theta decay and IV crush. And even though the market goes up, you're going to lose a lot of value by preempting that and front running it, right? So you're much based on historical data. Obviously, nothing is guaranteed. So for those of you keyboard warriors that are, ready to come back to the video and be like, ha ha ha, you were wrong. This is just historical data, and I trade based off of what is the most probable trades. You can trade based off of guessing and FOMO and emotions if you like, but I trade based off of data. And if you do that and you have a strict trading plan and you come up with a strategy where you're trading high RR situations each and every time, well, the goal is not to be right every time. The goal is to be right more than you are wrong. That's it. So I will likely open up futures contracts in the morning because those, or maybe even towards market close today as of the time of this recording, or maybe after hours if we get another drop, because futures contracts can be held at face value. They don't suffer things like theta decay, IV crush. You could just hold them and, they trade like stocks, meaning that they just have a price. If the price goes up, you make money. If the price goes down, you make money, versus options where you are still subject to external factors that are challenges. And even if you are right, you have to be right significantly, or the value of that contract can decrease, even if you are right directionally on the underlying. So that is what happens during every rate hike cycle in 2022. And I don't expect anything to be different. I am going to likely play calls or bullish futures, or both, on the indices. Really, you don't need to play anything else, in my opinion. But on the indices, after the Fed starts talking, right? So around that 2:30 p.m. Eastern time level. Anyway, traders, short and sweet for you. That is it for this video. Again, sign up. We have only a few spots left for September. So sign up if you want to apply. Book a free call with one of the ambassadors if you're interested in applying for the academy, where you'll get access to the options course, the day trading course, the chats, the Zoom calls with me, etc. Leave a comment down below. Let me know what you think. Let me know how you're trading it. Let me know if any of this information was eye-opening to you, especially regarding the intraday analysis on the indices during the FOMC meetings. Always interested to hear from you guys. Always try to respond to each and every comment. Hit that thumbs up if you got anything out of this video. Subscribe. If you're watching this and you're not subscribed, subscribe and turn on those notifications so that you see these things in a timely manner. Stay safe out there, traders. Peace.